Let me set the scene here. Yesterday, we were lost in the depths of despair after yet another multi-day meltdown. Then this morning, we come in and the averages were higher at the open, in large part because Boeing, a market bellwether, announced some very positive news for its shareholders. The aerospace titan's giving you a 20% dividend boost on top of the 20% boost you got last year, bringing the yield up to 2.6%. That's a sign of confidence. Second, they announced a $20 billion buyback, which is a huge event for a company with a $179 billion market cap. In short, Boeing showed you that its business is good, not with words, but with cold, hard cash, which is why the stock folded nearly 12%, almost 3.8% today. Or $12 or 3.8%. Can it keep climbing? Let's take a closer look with Greg Smith. He's the CFO and Executive Vice President of Enterprise Performance and Strategy at Boeing. Learn why the company's returning so much capital to investors and what it means for the future. Mr. Smith, welcome to Mad Money.
Thank you, Jim.
Okay, Greg, so what gives you the confidence with a trade war, with an uncertain time, to do this gigantic buyback?
Yeah, well, Jim, I think, you got to look at the foundation we have today with our strong backlog. We've got about 5,800 airplanes in backlog, which is about 7 years of production. And then as we look beyond that, there's a need for 43,000 aircraft over the next 20 years. So we see a continued growing market. And part of that growing market is a replacement element. And this is about having the right products and services in the marketplace to win. And we've been making, at the same time, deploying cash back to shareholders, we've been making significant investments in the business around productivity and innovation to ensure that we've got the right products and services in the market, not just for today, but in that 43,000 aircraft market combined with a service growth market and a defense market to win.
All right, so
That's giving us the confidence.
Let's drill down on this 43,000. A lot of people say, well, wait a second, Boeing, 1 out of 4 planes goes to China. We are in a trade war with China. We're fighting back. President Xi making tough comments just today about the U.S. If they cancel all their orders, wouldn't that be make it so that you shouldn't be buying back stock and boosting the dividend?
Well, I think, Jim, again, you got to step back and look at the diversity of not just the backlog, but the market going forward, and just look at the fundamentals within China, and there's a need there for about 7,700 aircraft over the next 20 years, and we've been working in China for about 50 years, and then just drilling down on the fundamentals within the country, the growth in the middle class, and that 10% of the population has a passport. We see, continued, great opportunities there and a portfolio that can meet those needs within that market over the long term.
Would you have other airlines want those planes if China were to pull back?
Well, we certainly got strong demand, in particular on the wide body, Jim, or on the narrow body, I'm sorry. We got strong demand, but we also have seen good demand, on the wide body, and not just on the passenger side, but we've seen freight coming back and the outlook for freight even stronger. So, things like the 787, we've booked 109 orders this year, and we just delivered our 787th 787. And as you know, it's game-changing technology we're putting into the market, and that's what's really allowing us to position to win and deploy our capital efficiently.
Okay, speaking of deployment of capital, a lot of people are pretty gloomy, Greg. They think that stock market, they can't make money. How about what would have happened if you owned Boeing the last 6 years, both repurchase and dividend?
Well, we've been a big focus, obviously, on cash generation at the core of the company, cash generation, and I'll say efficient and effective deployment. So we've bought back about 230 million shares over the last 5 years and increased the dividend by about 325%. At the same time, we put about $40 billion into the business through really innovation and as well as capital and overall productivity tools that we put in place. So a balanced, I'd say deployment, but been very consistent with our deployment efforts and very much, doing what we said we do, which first and foremost starts with executing to our plan and delivering strong cash flow and deploying that cash flow in a very efficient manner.
Okay, you repurchase program, new $20 billion authorization, up from $18 billion approved last December, but the stock is higher. Why would you increase the amount?
Yeah, as we just look at our free cash flow opportunities going forward, Jim, and the year-over-year growth profile that we see, we thought $20 billion matched that continued growth that we see going forward, and we asked our board for that authorization, which they gave us, as well as, again, that 20% increase in the dividend.
Okay, I was looking at a Canaccord Genuity piece on Boeing saying the Lion Air tragedy, and it's a terrible thing, the fallout continues to weigh on the stock. Is there anything new you can tell us about the Lion Air tragedy and any impact on the company?
No, Jim, I mean, obviously, we're deeply saddened by the tragedy of Lion Air, and it weighs heavily on, of course, the whole Boeing family here. And as you know, safety is at the core value of what we do and we've done and will continue to do going forward. So we're working with our customer and working with the investigation team and the authorities and really, again, really working with them to determine the root cause. And we'll continue to do that until the investigation is complete.
Okay, Greg, we had Jim McNerney on a couple of times, a former CEO.
Yeah.
And at one point I asked him, I said, look, this rivalry with Airbus, he had gone to Yale, I went to Harvard. Is it like Yale versus Harvard? He said, no, it's not like that at all. Where is the rivalry right now?
Well, I'd say we have a competitive edge. Look, it's a competitive marketplace. And we're mindful of what the competition is doing, not just today, but I think where we think they're investing going forward and the services they're going to offer. But it's a big market. It's wide bodies alone, 9,000 aircraft will be needed over the next 20 years. But we welcome the competition, Jim. I think it makes us better. But the competition is fierce, and we're playing to win. But again, we're trying to make sure we're making the right investments to continue to have that competitive edge as we look at the markets going forward.
Okay, so Greg, you mentioned cargo. This evening, FedEx reported it's very clear they have to spend a little more than people thought, or than anyone thought. I think all these companies have to spend more. Is that good news for Boeing?
Well, like I said, I mean, the fundamentals around the freight market have definitely improved. We've got a pretty incredible portfolio of offerings, whether it's the 767, the 777, or the 747. And as well as converted, passenger to freighter in our services business. So we got a great portfolio, and we're certainly, engaged with the customer to ensure that we're meeting their needs. And so, certainly strong growth there really gets to more demand, and we're focused on winning that demand and getting them, these game-changing products and services in the time frame that they need them. And that's going to continue, again, to be a big focus for us.
Last question. Oil prices have collapsed here. Typically, when oil prices go up, the airlines have to hold back purchasing. Are you getting any feelers from some airlines who are saying, hey, you know something, Greg, oil prices have really come down. This is really good news for us. We're going to rethink our orders and maybe put in more orders?
Yeah, no, Jim, I can't tell you we've seen any shift in the marketplace. Certainly, as you looked over time, there's not a strong correlation between oil price and orders, because I think as the customers look at these assets, they're long-term purchased assets. So they don't look at spot price. They look at the overall long-term operating cost of the airplanes. And like I said before, things like the 787 are delivering incredible efficiency to our customers and position us to win. So as oil moves and interest rates move around, the value proposition of the airplane still remains very strong. So we're on solid ground here, but we continue to monitor it going forward.
Excellent. That's Greg Smith. He's the CFO and Executive Vice President of Enterprise Performance and Strategy at Boeing, announcing a dividend boost of 20% and an increase in share purchase authorization of $20 billion. Definitely the most bullish thing that's happened since this market swoon. Mad Money's back after the break. Booyah! Jim Cramer here from Mad Money. Thanks for watching CNBC on YouTube. Click here to subscribe and get the jump on my exclusives with CEOs, plus market news, investing advice, and a whole lot more.